worth breaking down, both as an investor and as an owner. Although before we start, as Mariah Carey would say, all I want for Christmas is for you to hit the like button or subscribe if you haven't done that already. And if you actually do it, or if this video gets 69,000 likes, I will stop asking for the rest of the years. So thank you guys so much, and also big thank you to public.com for sponsoring this video, but more on that later. Alright, so in terms of my own involvement with Tesla, it all began in 2019 when I purchased a Tesla Model 3. Prior to then, I was never a Tesla fanboy, but I gotta say, once I took delivery, I immediately saw what everyone was talking about, and you never really get all the hype until you get behind the wheel. Within seconds of driving the car off the lot, I was absolutely infatuated with every aspect of it. So as soon as I got home, I thought to myself, if I enjoyed the car this much, chances are everyone else will too. So I made an investment back when the stock was trading at now what would be $17 a share. I never really thought much of it, and I just thought it would be cool that if the price of the stock did well, maybe that would be enough to pay for the sales tax on the car. But little did I know that would just be the very beginning. Now, even though $17 a share was an absolute deal, in hindsight, I remember the moment I bought the stock, it just immediately tanked. It kind of felt as though everyone out there was waiting for the moment for me to buy in, and as soon as I did, they could start dumping their shares, because within a few months I was down about 30%. It was just more bad news after more bad news. They saw their biggest sales drop in history, they were burning cash, earnings were horrible, and they were one of the most shorted stocks on the market. But even though I was down, I just held on thinking that I invested an amount that I was comfortable losing, and I may as well just give it a few years to see how it plays out. Well, sure enough, that was almost 4 years ago, and as I held on, at the peak, those original shares were up over 2,000%. But even though I believed I'd be holding on to those stocks forever, I thought the writing was on the wall to begin selling off, and a few of the signals are eerily similar to what I think we're beginning to see today. To start, the first time I began selling was back in February of 2020, when the price of the stock went from $17 to $60 a share, with most of that movement happening in just a few weeks. Back then, there really wasn't a single reason for the stock going up 300% in price, but the thinking was that since Tesla was heavily shorted, a series of good news, like topping Wall Street expectations or opening up a gigafactory in China, would send short sellers to cover their positions, adding a lot of demand and shooting the stock even higher. Frankly, at that point, I became concerned that excitement was driving the market way more than logic, so I sold half of my position, 3xing my money in less than a year. And right after that, I'm not gonna lie, I looked like a genius. But I made the mistake of not being able to time the bottom, because right after that, the market went crazy. From March of 2020 to January of 2021, Tesla stock increased almost 1,000%, fueled by record low interest rates, a 5-to-1 stock split, and excessive interest in the stock market that pushed valuations higher than I ever could have imagined. Then throughout the end of 2021, things got even crazier with the announcement that Hertz was planning to order 100,000 Teslas for their fleet, Uber said they'd offer up to 50,000 cars to their drivers, California issued a mandate that all new cars must be zero emission by 2035, and with some people saying that Tesla was 10 years ahead of the competitors, people bought in while the stock was soaring higher. Although the reality is, the faster something goes up, the quicker it could also go down. At its peak, Tesla was valued more than the next 10 automakers combined, even though they delivered only a fraction of the cars. And that is where we get into a few of the recent problems. In November of 2021, near the peak of the market, Elon Musk posted a poll on Twitter asking his followers if he should pay his fair share in taxes by selling 10% of his Tesla holdings. Personally, I felt like this was his way of being able to cash out of the stock during a time where it was trading at unrealistic expectations, and I have a feeling he knew this, and he used the audience to his advantage to pay taxes. Now, sure enough, shortly afterwards, the Federal Reserve began raising their interest rates, and the entire market began to fall, which included Tesla. So it appeared as though Elon Musk picked the perfect time to sell. Then again, in April of 2022, when Tesla stock had almost completely recovered back to its 2021 high, he offered to buy Twitter for $44 billion, which, you guessed it, would also require him to sell off even more of his Tesla stock. Unfortunately though, in the months leading up to the sale, his Tesla stock, which he'd be using as collateral, fell about 40% in value, so as you would expect, he tried to get out of the deal. But months later, he wound up conceding and sold another $7 billion of Tesla stock and taking Twitter private. private. Then again, in November, he sold another $4 billion of Tesla stock, which is theorized to have funded operations at Twitter, and then again in December, he sold another $3.6 billion. In total, throughout the last year, he sold about $40 billion in value from the stock, while investors argue that he's taking money from Tesla to plug the losses of Twitter, which he had no reason buying in the first place. Although this is really only the tip of the iceberg, and the rest is something that not a lot of people are talking about. Although before we go into that, when it comes to the stock market, our sponsor Public.com wants to help you get started on the right path by giving you a chance to receive a free stock worth all the way up to $1,000, but we'll cover that shortly. That's because when it comes to investing, it's crucial that you fully understand what you're investing in. So Public gives you access to all the tools and information that you need to make informed investment decisions, including a premium membership tier where you can unlock advanced data, exclusive content, and VIP member support. They're also the only investing platform that allows you to invest in a wide variety of options, from stocks, ETFs, alternative assets, collectibles, and more, all in one place without participating in the controversial practice of payment for order flow. That means that you'd be able to use Public for almost everything, including evaluating a company in close detail. For example, you'd be able to track unique KPIs like how many vehicles a specific model Tesla has delivered this quarter, Disney's latest subscriber growth, or